Hey there, YouTube family. I have a treat for you at the end, so make sure that you stay to the end. Hello, hello, hello. Welcome to Trading Made Easy right here on YouTube. I'm certainly glad that you find yourself here. And I am back with a simplicity video. I'm going to show you some simple, easy trading strategies utilizing the simplicity trading system. So stay tuned, subscribe to the channel, like the video if you found value, and just come back and visit every time that I put up another video. So today I am going to be talking about the demand and supply zones, or the hot zones, as it's called within the community. Okay, these are very, very pivotal. And in my opinion, this is the bread and butter of the simplicity system. This is the bread and butter. If you decided to trade these zones, So I'm just going to go through a couple of pairs to show you the accuracy of what takes place when price exits the zone, right? So price actually came into the zone and it populated what? A big arrow. We're on NZD USD, a big arrow. We're on the hour chart. I always do the hour chart. And so before all of this activity took place, seeing the big arrow here lets us know that price wants to do what? It wants to go up in an uptrend. Now, I added the big arrow from the original triple arrow system. However, if you do not have the original triple arrow system, that's perfectly okay. The fact that price is inside of this zone, demand zone, automatically tells you what is going to happen. It's going to go up. It's going to break out at some point, right? We know that. We just don't know when. We don't really need to know when, to be perfectly honest. We just know that's where price is going. And what we want to do is follow price. But there are some criteria that needs to be met before we do so. And I'm going to explain that to you. And if you decide to trade this method, you will definitely begin getting consistent pips. So we are in a identified demand zone, which the simplicity system identifies for you, right? It identifies for you. Now, we have price inside of the zone. Anytime price is in the demand zone, you're going to be looking for buys. You're going to be looking for only buys, right? You're going to trade the trend. And so you're only looking for buys. Now, you do not want to get in the trade while price is in the zone for a buy. You don't want to do that because that's a risky trade. We're still in the zone. We need to make sure price comes out of the zone. It needs to break out of the zone, right? And close outside of the zone. Because once that happens, structure has been broken. And when price breaks structure, it tends to continue to go in that direction. Now, there are other confirmations that we use as well, but just that alone is very strong. And that's the first criteria before you actually get into a buy position. Now, when price enters into the zone, and of course it starts to make its way out, everything is fine. That's fine. We're not doing anything until when? Until it comes out, right? Once it comes out and it closes, then what we're going to do is we're going to take our crosshair and we're going to put the crosshair at the close of that candle. Now what we're going to do is we're going to look at our trend surfer, and that's this right here. And what do we want? We want the color to be green. Green is great. It's conservative, right? It's safe. It's a good position. If it's green-red, you still can get into the position. It's just a little aggressive. That's all it means. It doesn't mean that it's a bad trade. You can still get in. And then what we do is from that point, now the MACD, I don't use the MACD per se for this particular trading style, trading zone to zone. I really don't use the MACD. However, if the MACD is supporting, if it's supporting it, then is okay. See, the MACD what it does is it primarily tells you when the trend is reversing. And I use this for the Trading Made Easy trading plan that we use inside of our Telegram group. And this is what our flagship trading plan. And we use the MACD. However, if the MACD supports it, that's fine too. If not, I'm not too much worried about that. I'm not too much worried about that. So at this point, I'm going to put my crosshair at the close of the candle. I'm looking left. The reason I'm looking left is because I have previously documented data that tells me what price did in the past. And because we know price always revisits, always repeats itself, we know that these are areas where price will likely hit again. And so what I'm going to do is look left, and I'm looking at the previous support dots, or if I didn't have these dots here, it's fine. I'm looking for areas of consolidation, right, which is here. Oops. And that will be this candle here. Areas of consolidation. That's what I'm looking for when I look left. If you don't have the support dots from the original system, I'm looking for this because the support dots populate in key areas, and those key areas are consolidation areas or pivot areas where price pivoted and went the opposite way. Like in this case, even if you didn't have your support dots here, you see price went down, it wicked at this point, it pulled back up. The next candles did what? It went up. That's what I call a pivot. So those are areas that I am looking for. And so in that case, right, I'm looking left and I'm looking for consolidation. So I have consolidation right here. Okay. I'm looking for 12 or more pips from the close of the candle to the previous area of consolidation. So that puts me right in this area, which is about 12, 13 pips, right? And then I'm looking at, where am I? This day here. So this day, I focus my attention on the previous 48 hours primarily. So even if support dots extend over and like here and got this one dot, that's fine. I consider that, right? And in this case, it's 32 pips. However, look at this pivot right here. Let's say you didn't have the dots, right? Because you didn't have the old system. Right here, always put it at the close of the candle, not the wick, so that you can get the true closing price, right? That's the true closing price. So put it at the close. What's that? 24 pips. So I know that I can get 20 pips out of here. Price is going to reach those levels. And as you can see, right at this point right here, it has not reached it yet. But did it break this level here? Right? It did. It broke it on this candle right here. We're right here, actually, right on that support level. We're right at those dots, right at this previous candle. Now this candle is active. And thus far, it has broken this area. But if you was already able to identify this area as an area where you wanted to maybe TP at this point, then you would have already been in profit. You would have already been in profit. Now, what is the likelihood that price is going to reach this point right here? His strong likelihood, right? I would definitely bet the ranch on it is going to reach it, right? We just don't know when, but we don't need to know when. We just need to know that it's going to happen because we've identified previous areas where price had a reaction. And that's where we sit and we put our TP at because we know price is going to visit that area again. And look at price. It's going up. Will it visit? Absolutely. Absolutely. Right? So let's say you did that at this point right here when price actually broke out of the demand zone, right? Which is the first criteria. And it closed. And it's a bullish candle that broke out and closed. Very important criteria, right? So from that point to where price is at this level right here was 24 pips. We're at 21 pips right now. So the likelihood of this happening, yeah, it's going to happen because it's previously identified areas of reaction, pivot, and consolidation. So let's move on to another pair. And we're just focusing on the demand zones or the supply zones. Let's go to USD CAD. Actually, let's go. Well, we're here now, so that's fine. Alrighty. So look at here. We have a supply zone where price has entered into the zone. We want price to enter in and then come out. That's what we're looking for. And in this case, it did, right? So we're looking for price to break the zone and close. And then from that point, we go through the rest of our confirmation. So right here on this candle, it broke out and it closed below, right? So this is the candle that we're looking at. Now we're going to look down at our trend surfer. What do we want? We want red, right? And what do we have? We have red, red. We have red, red. So we're good, right, for a sale. Now what we want to do is we want to look and left because we're looking for support and resistance, right? We're looking for the support dots if you have the old system. In this case, these are the support and resistance dots that's in the simplicity system. And it tells you right here, based on where candle closed, right here, it pretty much closed, 3 pips shy of sitting right on this support level. So that right there would stop you from taking the position because we're basically sitting on a support level. Think of a ball. If you bounce a ball on the floor being the support, what the ball going to do? It's going to bounce back up. And that's what we can expect to happen with the next candles. And as you can see, candle went down. The next candle went down. It sat right on the support dots and it closed, right? It didn't break through. Now we're at this active candle here, and it's pretty much doing the same thing. But we don't know because it's 12:17, and basically we have about 45 minutes left on the candle to see what it does. If it breaks through, awesome. And more than likely it will because we know it will break. We just don't know when. I have to keep saying that. I don't want to give the impression, 100% is going to do this. We cannot make those assumptions. We can only go by what took place in the past, and we govern ourselves according to that, right? So in this case here, we wanted to break this support area. That's what we're waiting for. Break the support area. And then what are we going to do for our TP? Look left, right? Look left. I'm going to put it below the support provided that it breaks it. So we're going to look left, and we're looking for the previous support or resistance dots that form. Well, the simplicity support level is right here, and that's right at 15 or 14 pips, okay? 15 or 14 pips. Where's the next one? The next support level on the simplicity system is right here, right? Inside of the demand zone, which is 41 pips. So this is where you can potentially take this trade right to this area, because what price does from zone to zone, that's what it does. It travels from zone to zone. And the fact that we have the simplicity identifying a support level in the zone that is going to ultimately go in is an additional strong confirmation that that's where price is going to go. So yes, I would take that all day. I will position myself as far as my TP right at this point. Right at this point. I'm not going to put my TP below this support level because I don't know what's going to happen below the support level. It is a support level, which says that this is a area where price reacted. Price will stop and go the other way. So I'm not going to put my TP under that because based on history, price didn't break it. Price did not break that. So I'm not going to go below it. So right here, put your TP price, you're good to go. Let the trade run. Let the trade run. Now, where do you put your stop loss? Now, stop loss is subjective. I don't do a lot of training on stop loss because it depends on your risk tolerance, your personality, your account size, your lot size, all of those things. But from a system standpoint, you want to look for the previous, since we're selling, the previous high, and that would be a good stop point. You can even put your stop loss above the supply zone area, right? Because it's an identified area where what? Price did not break. So you can put your stop loss right above that if you wanted to. And then you're good. Let it go. So that's what we're looking at for USD CAD. USD CAD. Let's look at RUSD since it's the Asian session. Okay, RUSD demand zone. Look at that. When it comes out of the demand zone, when it comes out of the demand zone, it will rally. It will rally, right? If it comes out of the supply zone, it will rally down. It will rally down. So, but you still want to utilize your criteria. Okay, so it came out of the demand zone here. Okay, and we put our crosshair at the close of the candle, look down at our trend surfer. We have green that supports this bull run, right? What that tells you at the trend surfer is that the green, what it tells you is that this is the trend, the dominant trend. This is the strength of the trend is bullish, is bullish. So if you want to, at that point, you can take the trade. You can take the trade. I like additional confirmations, of course, but you can do that, and you can ride it where? Up to the supply zone. So where at in the supply zone can you take this? Is it right at the beginning of the supply zone? Can you go inside of the zone? Where can you take this? Well, that's the benefit of looking left at previously identified areas of consolidation and or where price pivoted. So let's look left from this candle right here, and hey, it went all the way, price went all the way here. So the potential of price going to this point is relatively high, right? But we can't make assumptions. But this is an area that you can definitely consider. This area right here you can consider. Would you consider this area? I wouldn't. Why? Because it's outside of the zone. It's outside of the zone. Let's listen to what price is telling us based on what it did in the past, right? So these two areas right here, 57 pips. Right here, 69 pips. Provided you got in at the candle that broke out of the zone, which is the best time to get in. So now let me share, and as you can see, it's rallying up. It's rallying up. So even at this point here, you're looking at 41 pips if you took it to this point, 33 pips if you took it to this point. Okay. Now, one thing that I would say, the best position when you're trading from demand zone, supply zone, vice versa, is the candle that breaks out. The candle that breaks out and close. That is the optimum position. The entry price is optimum at that point. So how do you position yourself to where you don't miss that opportunity? Well, what you can do is set an alert. Where would you set your alert? All right, in this case here, I would set my alert right above this area right here, right? Right above these dots is where I would set my alert, because I would want price to break this this level. I would want price to break this level. So that's where I would set my alert. If you did not have the old, I don't want to say old because it's not old. It's a great system. I still use it. As you can see, I have components of the original triple arrows here that really just maximizes the full use of both trading systems simultaneously, right? But if you did not have it, you're still good. This is a great system. What you're looking for is your consolidation. Look left for consolidation. Look left for pivot points where price pivoting. And so what I would do is I would place my my alert on the close. Since we're going up, I want to place it on the close of a bearish candle, because price is going up, right? So I want to place it on the close of a bearish candle because I want to get a good entry. And when you are buying, you want to do what? You want to buy low, you want to sell high. So that's why I would look for, in the consolidation area where these candles are consolidating, I would look for the close of one of the bearish candles and place it at the body of it, right? And that price point, in this case 0.68456, that will be where I would put my alert. And once it alerts me, now you have an opportunity to come back and assess. And at that point, this candle would have closed. You would have been on this candle. So you would just look at the previous candle, right? And you do the rest of your confirmations. Look down, trend surfer, you got the green thumbs up on both upper and lower time frames. Bam, you can go ahead and take it. You look left, identify where you're going to put your TP, right? And you're looking for, and here's, now here, right here, I didn't see this. You can put it here as well. This is the support and resistance dot, the resistance dot that comes with the simplicity, right? So you can identify it right here. You can take it, right? But price did go to this point. Price did go to this point. So these are areas where price may very well revisit, right? So you can do that. But the fact that it's here, I would take it. I would take it here. I'm a conservative trader though. I focus on the lowest hanging fruit and I compound. So that's the secret to my success is the lowest hanging fruit and compound. I am an intraday trader. I like to see my account grow each time that I trade. I don't prefer to be in a trade more than 48 hours. I don't. Even 48 hours is long. Has that happened? Absolutely. I just have to weather the storm, right? But the trading plan, the Trader Made Easy trading plan, really helps to minimize that so that you can actually profit each time that you trade. And so join the Facebook group as well so that you can just start getting connected. And then, of course, you can book a session if you want the Trader Made Easy trading plan, and I can certainly share that with you. But I'll leave the links inside of the description of the video for those that want some individualized session, individualized training. I'll be more than happy to do that. More than happy. Okay, so that's there. So you can see what is it doing? It's rallying up. These are some good positions you could be profiting in right now, And whenever you see this video, just back test it. You see it's going to go to those areas. It's going to go to those areas. So that's Aussie USD. Let's look at Aussie CAD. See what Aussie CAD is doing. Bam. Beautiful. Beautiful. Now here's another little trick of the trade. Whatever your primary pair is doing, like for Aussie, Aussie appears at this point to be coming out of the demand zone bullish, right? It appears to be in a bullish trend going up, right? And what typically happens is all of your Aussies are typically doing the same thing. So Aussie USD was doing it. Now we're on Aussie CAD. It's doing the same thing, right? What other Aussie? Where the Aussie is the primary. Aussie Chef. Is that Chef? Yep, Aussie Chef. Aussie Chef doing the same thing, right? Inside of the demand zone, came out, it closed, a little bit closed outside here. You could have based your measurement here. If not, you can certainly have done it here. What is it doing? It's rallying up. You'll see that it's pretty much doing the same thing. Aussie JPY, same thing, right? So that typically happens. Whatever your primary pair is doing, it typically is doing the same thing on other other pairs where it's the primary as well. So that's just something that you can certainly use to your advantage. Now, just looking at this here, this is odd JPY. I would take my TP right here. This is a pivot where price went up and then it dropped. That's called a pivot. This is a pivot. Price went up and then what did it do? It dropped. That's a pivot. So identifying that, you don't really need your support and resistance. You certainly can use it, don't get me wrong. But this right here should be a strong indication to you that you don't want to take your TP beyond that. Okay? So what we would do is, since this is an active candle, I'm going to go to the one that closed previous. Look down, trend surfer, green, thumbs up. We rolling, right? Where is this likely to go? It's likely to go right here. And from this point to this point here is about 33 pips. It's about 33 pips, right? So that is a good position. These are some good trade setups using the simplicity and trading from zone to zone. Same thing applies with your sell zone. When it comes out and break out and close, that's the optimum time that you want to get in. Set an alert, right? So that you don't miss the move. You can even put in a buy stop as well. Um, I prefer to put the alert so you have an opportunity to assess what's going on with price before you actually execute. However, if you do put in a buy or sell stop, what I recommend is that you put it in at a 0.01, because you're not going back. You're basically telling the system to just put you in the trade, right? And that's fine if you do that, but make it a 0.01 so that it's not going to hurt you if it's doing something whacked out or something that you don't want it to do. It's not going to hurt you. And then you come and you assess the price at that point. And when price, and keep that position, that 0.01 position. And when price actually goes in your favor, if it has not already when you came back to the charts, then you'll drop another position at the actual lot size that you would have used. That's how you protect your account, just in case price goes the other way. Because putting in a pending order may be more suitable for you based on your lifestyle, based on your ability to interact with the charts, your schedule and all of that. So you can certainly do that. And if you decided to go that route, then what you want to do is put your pending order right at the top of the zone for a buy, at the bottom of the zone for a sell. But make sure it's a 0.01. And then that way you can always adjust your lot size in another position for the actual lot that you were planning on using. Okay. So again, if you come back and you say, hey, price is moving good, right? I'm in profit, price is moving, it's going in my direction, then drop a market execution order at that point, a market execution order, and you will put the lot size that you would have been using, for that particular trade. Okay. Now, if you're using the 20 pip strategy spreadsheet that we use, you will certainly put your lot size in according with the spreadsheet. I highly recommend using that spreadsheet because that is an awesome, great tool to compound your account. You'll be surprised in 30 trades, not 30 days, but 30 trades, how much your account would have grown if you committed to that spreadsheet. Okay. And so that's what the Graham fam, those that are my coaching students, have access to. And they're also in the Telegram group as well. But I totally recommend you doing it that way if the pending order is more suitable for you. Okay. So yeah, it is definitely rallying up, right? Rallying up to this point right here. So we're about 28 pips out. Yeah, this is definitely going to do what it's going to do, right? Okay, so let's take another one. Let's do Euro NZD. Euro NZD. Okay, coming out of the supply zone. Now, great. I love this one. Great teaching moment. Too late. It's too late. You don't want to be getting in the trade in the middle of the zones. Too late. So there's nothing else to be said on that. But what I would say is it's doing exactly what it's supposed to do when it comes out of the zone. The supply zone, it broke and closed right here on this candle right here. And basically what it does is it goes from zone to zone. And that's the goal. You can ride it from zone to zone. Now, as you see in this particular video, I didn't talk about any other components of the trading system, just that one. That alone can be a trading methodology that you use to catch your pips on pips on pips on pips. So I hope that has been a help for you, and it will definitely position you to consistently profit in the market, consistently. Now, take a look at this one. Okay, so it came out of the zone, it closed. Now look at your trend surfer. It's green, red. But see, this is my point. That doesn't mean it's a bad trade. It doesn't mean it's a bad trade. It's just a little aggressive at this point, right? Now, if you're selling and your trend surfer is green, don't take the trade, because the trend surfer tells you what the dominant trend is, where the strength lies, whether it's bullish or bearish. And if the strength is reading bullish on both levels, don't take the trade. Wait for the next candle to see what's going on. But if it's opposite and it's bullish bearish, that's perfectly okay. It's perfectly okay to take that trade, right? Okay. So I talked about stop loss, right? You just basically want to put your stop loss at the previous high or the previous low, right? Or you can use the zones itself and place your stop loss above that or below, depending on what you're doing. But if you come to the chart and you see this, it's too late. Just wait for it to go into the demand zone and come out, or look for another pair to trade. All right? Look for another pair to trade. Okay, this is the last one, guys. Let's do a USD pair, USD JPY. Okay, so USD JPY is coming out of what? A demand zone. Prices in, you got price activity in here, right? It came out here, okay, got to this point, and then what did it do? It went back down, right? Basically consolidating. That happens. It's not going to go straight up to the supply zone and straight down to the demand zone. It's not. A lot can happen in the middle. The middle is your risky position. Your risk is, that's not a quality trade. It's not. The best position is coming out of the zones. That's your best position to get into the trade, okay? In this case here, when it came out of the zone right here, came in, then it came out of the zone right here. What we're going to do, right, is we're going to look down. We got green, red. Okay, no problem, right? And what we're going to do is we're going to look left, right? We're looking left at our previous support or resistance or consolidation or pivot areas. If you don't have the old system, it's no problem. But I'm looking at this area right here, right? Okay, so that's going to give me what? About 25 pips there, okay? And what about this area right here? That's going to give me about 8 pips here. And then I have my triples, my bullish triples came in right here. So you don't want to ignore that, right? So that's about what? 29 pips right here. And so what you can do is you can go ahead and take that position. And right here, it went up about 22, and then it pulled you back. So you would have been played around with on this particular trade until when? Until it wants to break out and continue to go up. So I'm glad that this was an example, because it's not a perfect rally up, rally down. We wish, but price don't move like that, right? But we just got to know that price is going to do what the indications in the system tells us that it's going to do. And if it's inside of a demand zone, it's going to be bullish. It's going to be coming out of the demand zone. And when it rallies up to the supply zone, hey, it just remains to be seen, because we don't know when that's going to happen. But if we look left and we see these support areas right here, we know that price visited those areas and that price will visit those areas again. So we have to do what? We have to wait. Yes, we have to wait. And patience is a virtue, and patience totally pays the bills in trading. And so that's what we have to do. And if you did, say for instance, you got in here and you waited, right, to this point, yeah, you would have got your 26, you would have got your 30, right? Now, would this be an area to consider? I would not, because it's outside of the zone. I'm not saying that price won't hit that. It will at some point, but I don't know, right? I want to stay in the zone, because those are more bona fide actions, and it's already identified. And here's the other thing, right? Like these support dots, they did not, there are none, in other words, inside of the zone. So I definitely would be taking my TP before price tries to go in the zone, because I don't think it will before it pulls back. So use the indications that we have in the system as your eyes. They're your extra eyes to see what you may not have ordinarily seen. Okay, so hopefully that has been a help for you all trading zone to zone, demand zone, supply zone. It's a powerful way to catch your pips. So links are inside of the description. If you don't have the Simplicity system, I totally urge you to get it if you want to trade the simple, easy way. You definitely will have that opportunity doing that. So access the link that's inside of the description. And if you want a private session, those links will be there as well. Until the next video, guys, you all have a great night. Bye-bye. Congratulations, you stayed to the end. You stayed to the end. I just wanted to add the breakout rules if you decide to trade zone to zone. So, of course, you only want to take the breakout candle. That is the optimum entry from the zone. It's the first breakout candle that has broken out of the zone. Make sure that it is the same candle that aligns with your position. So if it's a bullish candle, the breakout candle must be bullish. If it's a bearish, it needs to be bearish. Then do not execute a trade in the middle of the zone. That is a risky place to execute your trade. Not saying that you can't make your pips, but you have a higher risk of getting sucked back into some drawdown before it rallies back up in your direction. That situation alone can cost you a couple of days just not doing anything, just waiting, and that's not a good feeling. So don't do that. Now, do not trade if both trend surfers are opposite of your position. Meaning, if you are in a buy, right, your trend surfer should be green, green, or red, green. It doesn't matter if it's opposite, but it cannot be red, red, because you are buying. If it is the opposite, if both trend surfers are the opposite, it means that there's strong selling or buying pressure for that particular trade at that particular time. So don't trade then. Confirm the 4 hour is in the same zone. That is your extra confirmation that the price is breaking out. Okay, so make sure that you go to the 4 hour. I trade the 1 hour, so I go up to the 4 hour. And if I am trading out of the demand zone, I want to see that the price is in the demand zone on the 4 hour. I want to see that. You can also use your confirmations that I spoke of in the video on the 4 hour as well. But all I'm really looking for at that point is that we are in the same zone. After that, other confirmations that I spoke of in the video checks out, you're good to go.